Gold is somewhat unsettled ahead of this week's FOMC meeting. Joining us today is Peter Hug. Peter, thanks for being back with us on Kitco News.
Yeah, it's good to be here again.
All right, well, let's take a look at gold's price action ahead of the conclusion of the FOMC meeting. Will the FOMC act as a poison ivy for gold again? Peter, your thoughts?
No, I don't think they will. I don't think there's any reason for the Fed to move at all, and I'm actually quite doubtful they'll move at all this year, given the action of the ECB last Thursday and the continuing negative interest rate policy in Japan and the slower growth in China. I just can't see the Fed having the ammunition it needs to raise rates.
Well, Peter, we just came back from two conferences where most analysts feel gold's rally is sustainable. What do you think? Do you think gold could lose steam here? How do the fundamentals look?
Well, we were a little cautious at the beginning of last week when gold failed to stay above that 1280 level, and a number of banks that had been bearish started coming out with bullish calls. That always makes me a little nervous. I always tend to take the contrarian side when that happens. But gold got a little tired up around 1280 and settled back. And the reason I think we've seen the weakness over the past couple of days is the market is positioned on the long side. And, I just think some people took some money off the table ahead of the Fed announcement, which will be due tomorrow at 2 in the afternoon. So I don't think there's been any significant change in the trajectory of the market. But the pause and taking money off the table when there's no notable news events coming out is totally consistent with the way normal markets trade.
Well, as you mentioned, we're hearing two very divergent point of views here. Some urging to get into gold, others to sell here. So how do you play it? Which levels are you eyeing, Pete?
Well, again, it depends who you are when the question is asked. If you're an investor, I think you have absolutely no option but to be in this market. At least from a percentage perspective. What's going on in Europe with negative rates, I think will backfire. Japan just can't get out of its own way. I don't have any confidence in China, and I'm highly skeptical on this recent rally in the U.S. equity market. I'm just not sure what's fueling it. Certainly isn't economic activity. So based on that, you certainly need a portion of your assets, in my opinion, in gold. Now, from a trader's perspective, this has been really quite a relatively easy market to trade. If you trade resistance support lines, you've been rewarded. I mean, yesterday gold broke through 1250 on the break of 1250. That was your sell signal, and you had $20 on the downside. Gold this morning supported at 1225, which wasn't a major support level, but if 1222 holds, that you buy it at 1222. So from a trader's perspective, there's been opportunity to be in and out of this market a number of times over the past 5 or 6 trading sessions.
All right, to wrap now, Peter, quick thoughts on silver. With the gold-silver ratio near 10-year highs, do you think the best play is to buy silver here?
Again, silver, platinum, palladium, they're influenced, unfortunately, from an industrial perspective as well as sort of, a sisterly perspective to gold. And, if gold continues higher, obviously, it'll pull along silver, platinum, and palladium. In and of themselves, though, until we get some economic activity showing in Europe, and if China, starts to, increase demand again, I see these metals lagging, at least from a ratio perspective, gold. But they will trend the same way as gold, but they're not going to outperform gold until we get some economic activity to justify it.
Thanks so much, Peter. We'll see how gold reacts to this month's Fed meeting, and thank you for watching. We'll see you tomorrow.